Join me as I dive into the world of Uber deductions and see if I can uncover all the missing ones you need to know right now. As an Uber driver, you're probably aware that you can deduct certain expenses on your tax return to maximize your earnings and minimize your tax liabilities. But are you making the most of it? Understanding Uber deductions is crucial to keeping more of your hard-earned money. Many drivers think they know what expenses they can deduct, but often get it wrong. For instance, some drivers assume that only direct expenses like fuel and maintenance can be claimed, but that's not the case. Others might think that personal expenses like their daily commute can be written off, which isn't true. This confusion can lead to lost money and a bigger tax bill than necessary. Some drivers also overlook the fact that they can't deduct all business expenses on their tax return. For example, if you're using your vehicle for personal use as well as for Uber, you can only deduct the business use percentage. Not understanding these rules can result in missed deductions and a missed opportunity to save. To make things worse, the tax laws and regulations surrounding Uber deductions can be complex and ever-changing. This makes it even harder for drivers to stay on top of their deductions and ensure they're taking advantage of all the eligible expenses. Another misconception is that you need to have a separate business bank account or a fancy record-keeping system to claim deductions. Not true. You can still claim deductions with a simple and organized record of your expenses. So, what are some of these often overlooked deductions that can help you save? Let's start with mileage, one of the biggest deductions for Uber drivers. You can deduct the business use percentage of your vehicle, which includes not just the miles driven while picking up passengers, but also the miles driven to get to the passenger and even the miles driven to go get fuel. Vehicle maintenance is another often missed deduction. This can include oil changes, tire replacements, and even car washes. And don't forget about phone expenses. If you're using your phone for business, you can deduct the business use percentage of your phone bill. Tolls and parking fees are also deductible and can add up quickly, especially if you're driving in a busy city. Even things like snacks and drinks for passengers can be claimed as long as you're keeping track of these expenses. One of the most surprising deductions that many drivers miss is the home office deduction. If you're using a dedicated space in your home for administrative tasks like keeping track of your expenses or communicating with passengers, you can claim a portion of your rent or mortgage interest as a deduction. This deduction can significantly impact your tax return, especially if you have a dedicated home office space. For example, if you use a spare room in your home for your Uber business, you can claim a portion of your rent or mortgage interest as a deduction. The key is to keep accurate records and understand what expenses are eligible. Don't assume that just because you're driving for Uber, you can't claim certain expenses. The deductions we've discussed can add up quickly and make a big difference in your tax return. By taking advantage of mileage, vehicle maintenance, phone expenses, and even the home office deduction, you can maximize your earnings and minimize your tax liabilities. If you've had any experiences with Uber deductions that you'd like to share, please comment below. And if you're interested in learning more about tax tips for gig economy workers, be sure to check out our other video on that topic.